other problem that I have, and this is why I like a business owner to have a closed corporation or a company or a trust to operate through. I'll tell you why. Because it forces the business owner to differentiate his private expenses from his business expenses. Because very often we compete with our businesses for cash flow. Now, being legally qualified, the other reason why I like to separate the entity that I'm trading in from my private capacity is that there is some protection for my private capacity, in my private capacity, if I'm trading as a closed corporation. It's called legal liability, and by creating a line between my private business and my business, I am protecting to a large degree my private assets. But that's a whole new presentation. So, you look at your bank account and you see, wow, man, I've got some money. I've had my eye on that lovely black X5. Now is the time to buy the X5. I've got some money in my account. So what happens is, off we go to the local BMW dealer and we buy the X5. And then at the end of the month, you know what car sickness is? That's a feeling you get in your stomach when you have to pay that installment at the end of the month. Okay. So come the end of the month, I've now got to pay this. Now, quite honestly, the X3 could have been quite handy. But I'm just so excited about being a business owner, and I need to show the world that I'm successful, so I buy the X5. Conflict of interest. You are competing with your business for cash flow. Please be very aware of that. And that's why you'll see I like to do cash flow planning over a 12-month period, month for month, rather than annually, which a lot of us tend to do. So please, be careful of being in competition with your businesses for cash flow. Maybe I should get out the road right now. If your business has a cash flow problem or a cash flow challenge, it is not necessarily a bad business. Cash flow challenges can be caused because you've got a good business. Okay, so don't let that scare you and make you want to give up. It is a normal part of business. Expansion can cause cash flow issues. So don't be afraid of having that experience in your business. The other problem that we have with cash flow is sometimes we use the money inappropriately. In the event, where's Terry? Terry mentioned that the bank have facilities where short, medium, and long term. Did he say that? Okay. Now, what he means by that is that if you have a short-term requirement, now that is money that you need on a month-to-month basis, like salaries and wages or rent. Then you might also have money that you need for buying a vehicle, plant and equipment, computer system. Now, the accountants will tell you that any asset that you use in your business for more than 1 year is termed long-term. When you buy assets for long-term, it is not really appropriate to use your short-term money. And when they say that, they're not really... Look, I know they want to make money out of us from an interest perspective, but Farmer Brown, let me give this to you as an example. Farmer Brown wants to buy a bakkie. He saves up for 6 months and he's got 100,000 Rand in his account to buy this vehicle. His monthly expenses are 30,000 Rand. So he goes and buys the vehicle cash for 80,000 Rand. So how much has he got in his account? 20. Come the end of the month, he's got a brand new bakkie, fully paid for. He's got 20,000 Rand. But he's got to pay out 30,000 Rand. Has he got a cash flow problem? Yes. Correct. So ideally what Farmer Brown would do is he would go and buy the vehicle on installment sale or HP or lease. And then what would happen is the following scenario. He would have 100,000 Rand in the bank. He'd put down 20,000 Rand as a deposit. Then at the end of the month, he's got to pay an installment of, say, 2,000 Rand. So he's taken 22,000 Rand out of his 100,000 Rand. How much has he got left? I'll tell you, 78,000 Rand. Has he got a cash flow problem? No. But us business owners, first of all, I know sometimes we have challenges in getting the finance. I understand that. But very often we don't want to owe anybody any money. What happens if I can't pay the installment next month? Well, think about it. If you've got 80,000 Rand to put down to buy a vehicle and the installment is 2,000 Rand a month, surely you've got 40 months of cash flow to pay it. Okay, so be very careful of using short-term money for long-term assets because it can create a cash flow problem in your business. Next time you're at Checkers or Pick n Pay or one of those retail stores and you're standing behind somebody that is buying groceries, be it 3 loaves of bread and 3 pints of milk and a cabbage, and this person hauls out his credit card and he gives it to the cashier. What does the cashier ask him? Straight or budget? Now I ask you, is food short-term need? Yes. Am I going to pay on budget for short-term? No. Exactly the same in your business, excuse me. Exactly the same in your business. So make sure, ladies and gentlemen, that you're using the appropriate financing for the appropriate need, because you could have a cash flow problem, just like Farmer Brown did. Okay. Retailers often buy a lot of stock. Now, I'm not saying to you don't buy stock when it's at a good price. What I would like you to keep in mind, though, when you're buying stock, stock is cash on your shelf. And if you are experiencing cash flow problems, it may very well be that you've got too much stock on your shelf. Now, I often say you operate on the just-in-time principle. Make sure that if you need goods in October, you don't buy them in February. Okay, because that money, that stock will sit on your shelf for 6 months or 8 months. Bill, the super salesman, my very good friend, says, Thayn, bring the stock. Bring the stock. Why? Because he wants to sell it. So you have 2 options. Either you work on a just-in-time principle or you make sure that the stock you've got, you sell very quickly. Would you like a little formula? I know this is not a maths morning, but here's a little formula for you if you want to write it down. If you've got financial statements, go and have a look in the last year or two's financial statements and take your cost of goods sold. You know what that is? Your cost of goods sold, and you divide that figure by your average stock holding. Cost of goods sold divided by average stock holding, and you're going to get a number. Now, your average stock holding literally is the average of 2 years or 2 months, however you're going to do it. Now, when you get that, let's say it's 100 is your cost of goods sold, and your average stock is 50, you're going to get 2. Am I right? Yes. I'm not going to ask you 17 times 14. So that means you have actually turned your stock over twice in that period. The idea would be to make it 3 times or 4 times. So go have a look at your stock turnover rate, and then you can see how you can manage your stock. Okay, so cash flow problems, ladies and gentlemen, are symptoms of one of these 5 issues. The 5th one is clearly in combination. You might have 1 or more of those. So if you're sitting in the audience today, or you're watching this on computer, check your stock holdings, check all of these items and see where your cash flow problem is actually arising.